Hey there, welcome back to our channel, Finance Experts. Are you really interested in investing in stocks? Do you need to earn a large return for your investment? And also, don't you know how to start it? Then this is the video that you should definitely watch. Stay till the end of the video to identify the best tips from experts to invest like a pro. You will understand how crucial it is to invest the funds you have so that they continue to grow. The money you have could instead simply sit in cash, earning nearly nothing if you don't invest them, since you probably worried about it and that you don't know exactly how it develops or what safety measures to put in place to guarantee it increases regularly. This was a significant barrier that numerous people experienced when seeking financial advice through our channel. But if you adhere to these important steps, you'll be able to start investing with confidence while making your financial resources benefit. Discovering how to buy stocks is the first step in discovering how to make an investment. Investments in stocks have historically outperformed a number of other products in terms of return, thus rendering them an effective instrument for anyone trying to increase their wealth. You may start your investment adventure by finding out how to acquire stocks with the aid of our guide. The stock exchange is the location where shares can be purchased or sold. This allows for flexibility and assists to guarantee that sellers receive the greatest price as well as buyers may purchase at the cheapest rate possible. In this case, different trading platforms offer a venue where buyers as well as sellers may come and meet to buy and sell shares. In general, the liquidity is higher when there are more shares that change hands each day. Stocks with little liquidity are riskier because there can be a chance that an investor may be left holding a declining price stock, having no one else to sell it to. If there was no one ready to buy your 500 shares, they would be practically worthless. It's crucial to comprehend how exchanges operate before you purchase your first stocks. In order to do this, you can follow the above explaining tips. Establish a plan along with goals. What is the purpose of your investments? Is it to make retirement savings or to establish an emergency fund? Before you begin investing, it's critical you first establish your objective by choosing an application and time frame for the funds you are investing in. You need a strategy to assist you to achieve the objective after you've established it. By first evaluating where you are right now, are you ready to start creating your strategy? How much money have you already set aside? Do you still have time to get the funds before you need them? Finding the optimum allocation of investment, model appropriate investment vehicles requires doing an audit of where your assets are now in relation to where you wish to end up. Understand your risk tolerance. When the markets fall, do you become nervous or do you simply accept it as a necessary step in the investment process? Your chances of staying involved regardless of the market cycle increase by ensuring you balance your financial commitments to the degree of risk that you feel comfortable with. Acquiring stocks can appear like such an overwhelming task, but after you do it, you'll have a multitude of investment choices available. Now you might have the doubt, how can I acquire stock? We can answer this question with the aid of the procedure mentioned that follows. The more times you go through the procedure, the quicker you'll become at purchasing stocks. Follow the instructions provided to improve your stock market success. Stock investments can be made in a variety of ways. You can select one of the following strategies or combine any of them. Your investment objectives and level of management of your portfolio involvement will determine how you purchase equities. Now let us consider some of the stock investing styles. Purchase individual shares. Purchasing individual stocks may be an intelligent way to begin investing, assuming you appreciate learning about markets and businesses via investigation. Even if the stock prices for specific firms appear to be somewhat high, while you're just beginning out with only a little amount of capital, you may want to consider purchasing shares in fractions. Purchase stock ETFs. To follow a fundamental index, ETFs or exchange-traded funds purchase a large number of individual equities. When you invest in an ETF, it's similar to purchasing stocks from a huge variety of businesses that belong to the same industry. Similar to stocks, ETF shares are traded on markets. Nevertheless, they offer more diversity than holding a single stock. Invest in mutual stock funds. ETFs and mutual funds have certain commonalities. However, there are also major differences. Administrators of mutual funds with active management choose various companies in an effort to outperform a benchmark index. Your benefits from investing in stock mutual funds are made up of interest, dividends, plus capital appreciation. Index-based funds with fewer charges are mutual fund investments that function a bit like ETFs. Now let us consider some of the steps and advice which is useful when purchasing stock in order to gain higher returns. The first guide for you is to reduce debts owed by you, especially those with a high interest rate. This is a key initial step that should not be disregarded even though you are attempting to stay from concentrating too heavily on the private financial aspect of purchasing stocks. If you have a balance with your credit card, the existing line of credit, or any other types of significant interest loan instrument, really is no justification for you to be investing in stocks. The typical yearly return on the share market is 10%, and that's far less than the 18 to 22% interest rate you are probably paying on these credit cards. Therefore, use your cash to pay back your debts rather than investing it in stock markets. Do extensive research on internet brokers. You've got so many possibilities available, each with a separate set of price possibilities. Investigating dealers should take as much attention as investigating the genuine equities you plan to purchase. Be watchful to visit numerous review videos or documents which evaluate the main choices. Choose the one that most satisfy your investment requirements or objectives. Recognize the kinds of orders before you purchase. Investors have access to a variety of order options kinds. The marketplace order, which typically buys the stock above the going bid-ask cost, is the most basic sort of order that is employed. Register for an online brokerage account. You may register a virtual brokerage account in order to purchase stocks if you're comfortable with the fundamental grasp of investing. With a brokerage account, you have complete control over the selection and acquisition of stocks. Contact a financial consultant. Consider employing a financial counselor if you're seeking additional ideas and guidance for stock purchases and other financial objectives. A financial advisor works with you to identify your financial objectives before purchasing and handling your investments. In consideration of their services, financial advisors may charge a fixed yearly fee, a charge for each trade made, or a portion of the wealth they administer. Choose a robot advisor. A straightforward and incredibly affordable approach to buying equities is through robo-advisors. The majority of robo-advisors invest their funds in various ETF portfolios, as well as buy the assets while handling the portfolio on your behalf. Although they are typically less costly than professional consultants, you hardly get the advantage of a live person who can direct your decisions and answer queries. Invest in stocks directly through the use of a plan. Many businesses provide programs that allow you to obtain their shares instantly, even though you only want to make purchases in a few equities. When you decide to sell or transfer the shares you hold, several programs may charge additional costs even they advertise without commission trades. No matter what technique you use to invest in stocks, be mindful that you will probably have to pay fees at some time to buy or sell equities or to perform account administration. Pay attention to the cost and expense ratios for ETFs as well as mutual funds. Don't be afraid of contacting a digital brokerage or a robo-advisor on a fee schedule or to speak with a customer care person to get advice on potential costs. Now finally, you can put your trade in. It's time to get to work now as you have gained a good understanding of how to purchase shares through your specific brokerage. Keep an eye on the stock, but again, not daily. By doing this, you may prevent feeling emotionally affected by the ups and downs that come with stock ownership, and you can decrease your propensity to trade your stocks regularly. Investments are how people make money on the stock market, but not by trading. We hope that our audience has received a very good understanding of how to invest in stocks like a pro, the importance of investing in stocks, types of investing methods, tips to invest, and also the pros and cons of investing in stocks. Thanks for being to the end of the video. Don't forget to like, share, subscribe, and tell us what you think about this video below in the comment section. Thanks for watching, and we'll see you in the next video.